Hey, Steve Spretsky here. As always, the Canadian real estate market update, a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask you hit thumbs up and subscribe. Questions, comments, put those below. As promised to my original subscribers to this channel, we are getting back to a once a month in-depth analysis of the Vancouver housing market. So that's kind of what this video is going to focus on today. So this is going to be outside of our regular scheduled programming where, again, every Saturday, we put together sort of a commentary on what's happening in the Canadian housing macro landscape. But this video specifically is going to focus on the Vancouver housing market once a month. And this video is ultimately prefaced off of my Suretsky report, which is about a 20-page monthly report, PDF format that I put out for free. So there's going to be a link in the description below where you can go and read that report and subscribe to it, so you can get it in your email inbox every single month. So I highly encourage you to check that out. But without further ado, let's get into this month's analysis, looking at covering the March 2021 Vancouver real estate market. We had, as a whole, so when I say as a whole, I'm basically analyzing REBGV, Real Estate Board of Greater Vancouver, so Greater Vancouver as a whole. You had record home sales across the board. That includes detached, single family, condos, townhouses, etc. So basically surpassing the previous record that we set, which was in March 2016. Now, if you remember March of 2016, it was a much different market dynamic. So back then, you had a situation where we had rampant population growth. You had massive amounts of foreign money coming in, particularly from China. So that March 2016 basically coincided those peak inflows of foreign capital. You had a strong labor market. And we actually had, at the time, we had underbuilding. So you could certainly argue at the time the run-ups in the prices were justified. Today, I think we are a housing market that's based not on fundamentals, but on liquidity, thanks to the Bank of Canada and the various policy makers here in Canada, as well as human emotions, basically people upsizing and moving due to a pandemic, which has completely altered everybody's day-to-day lives. So that's kind of what's driving the market today. Now, if you look at the single-family market to begin with, we had just shy of record sales, so we still are slightly below those March 2016 levels. But if we start to unpack that data a little bit further, what's important to look at is like the sales to actives ratio or the months of inventory ratio. So for example, right now we have a lot of these metrics are flashing red. So when I say flashing red, I mean they are coinciding with all-time highs and records that we saw back in April of 2016. So basically what I'm saying is if we're not at the top yet, we're really, really close to it. And then when I say we're really close to the top, I don't mean the 30% price decline is imminent. What I mean is that the froth is coming off, and we'll probably enter, in my opinion, at some point we'll probably enter some various form of a correction or a pullback. A natural, healthy pullback would certainly be welcomed. Now, so if you look at, when I say this, you look at the sales to actives ratio, again, hovering around those 2016 levels, right along where they peaked. You've got months of inventory right now below 2. So you got less than 2 months of inventory for sale. And obviously when you have less than 2 months of inventory for sale, that puts upwards pressure on prices. So when you hear the media come out and say, hey, we've got record sales, but record new listings, everybody gets confused. We'll say, well, all these sellers are rushing to the market. What you need to basically take is say, okay, well, let's filter through the noise, look at the months of inventory. That's going to tell you where prices are going. So sub two is higher prices. And sub 2 creates bidding wars. So what we can see here is, again, another metric that is flashing red. You have 55% of detached homes in Greater Vancouver sold above the asking price in March. So that's basically coincides again with record high levels set back in 2016. So these metrics for like froth are flashing red. And again, I don't think it's got much more room to go. Like, these things are flashing red, and we are getting more inventory coming to market. And I suspect that that's going to start to settle things out, which is, again, preliminarily what we're already starting to see. You're seeing. So I put out a tweet about a week and a half ago where I said, the Greater Vancouver housing market is slowing down, and early signs. And people were like, well, hold on a minute, we just had record sales. When I say slowing down, what happens is you go from 40 showings on a property down to 25, and then you go from, typically you're saying, let's say you get 8 offers on a house, you're going down to 4 offers. So that's the early sign. Then, 4 offers becomes 2 offers, 2 offers becomes 1 offer, and all of a sudden, the ability for the seller to push prices up starts reversing. So if you look at the prices today, again, lagging indicator, I can't emphasize this enough. Right now, the MLS benchmark, the home price index, which accounts for, it's hedonically adjusted, so accounts for the composition of houses that are selling. The home price index suggests that detached prices in Greater Vancouver are up 17% from last year. However, again, in reality, it's much higher because this is a lagging metric that arguably lags by 3 to 6 months. So we're actually seeing is the typical single-family house is up anywhere from, on the low side, you're 20%, to on the high side, upwards of 30 plus percent. But it's interesting to look at this metric because it actually increased 5%. It increased 5% month over month. So from basically what that metric is telling us is saying from February to March, prices for the typical single-family house increased by 5%. That's a massive, massive move. I mean, if you have 5% a month annualized, that's a 60% year-over-year increase in home prices. Clearly not sustainable. So, and again, when I say flashing red, you've got sales to actives ratio hovering, you've got months of inventory at all-time lows, you've got the number of homes selling above the asking price at record highs, and you've got 5% per month price acceleration. These are all flashing red, and I think are signs of overvaluation, and a correction or a pullback in the market is coming, I think, sooner rather than later. Now, if we switch gears to the condo market, it's arguably the opposite is what we're seeing. Is we're seeing that market was largely ignored. People obviously were upsizing during a pandemic because they're spending 90% of their time at home. So the condos were largely ignored, and the condos are they are not dependent, but they are heavily influenced by the investor. And so the investors have been fairly tepid. It's only in the last 3 to 4 months that you've seen the investors coming back into the market. So we've also seen that reversal with the condo market. So we had record sales. You also had record new listings in the condo market. But again, filter through the noise, and let's look at months of inventory for the condo market. The months of inventory in March collapsed down to 1.5. You've got 1.5 months of supply in the condo market, which statistically is actually tighter than the single family market. So the media isn't even talking about this. Think about this, is from June to November, for that 4 or 5 month period there, you had months of inventory basically hovering around 4. So we had 4 months of supply, which in Vancouver terms is actually a buyer's market. So from June to November, that was your buying period for the condo market. Now you're down to 1.5 months of supply. You've got a sales to active ratio that's over 60%. In fact, for the 1 bedrooms, if you're looking for a 1 bedroom in Greater Vancouver, which is again where most of the investors are playing, the sales to actives ratio for 1 bedrooms in Greater Vancouver is over 80%. 80%, that's the highest reading we've seen since early 2017. Now again, if you go back to early 2017, that was when we were starting to see massive run-ups in the condo market, right? The single family market cooled off, it topped out, and the condo market took off. So in my opinion, this is showing very similar parallels to the last boom that we had in 15, 16, 17. It was a single family market that led things on the way up. The single family market rolled over on its own accord, and the condo market then took off because it was kind of the last thing to sort of take off. It was the only thing that was left, quote unquote, affordable. And so we look at the condo market today, just look at the prices. The condo market says prices are up 4% year over year. That's pretty terrible, especially when you're factoring in inflation. So the MLS benchmark suggests condos are up just 4%. Now start to unwind this a little bit further and you see, hold on a minute, from February to March, that home price index increased 2.5%. So you can see 2.5%, again, compounded month over month, suggests that you're going to have massive condo price appreciation. And again, if you have months of inventory stuck sub 2, which is where we're at right now, in my opinion, the runway for the condo market is much more clear. I think the single family market is showing that signs of froth. We've already had that massive 20 to 30% run up in home prices. It's the condo market, the laggard, that in my opinion has the room to run because the investors are back into the market and the supply demand imbalance has changed. So that's all I got. This is kind of, again, the monthly report, the monthly wrap up. As I always say, it's impossible for me to predict these markets into the future. All I can say is looking at the current data, the next 2 to 3 months is very easy to call. It's as you start getting outside into 4, 5, 6 months, 12 months from now, it becomes impossible, right? I mean, my view on the market could start to change tomorrow if the Bank of Canada comes out and says, no more money printing, no more quantitative easing. We're shutting that down, and OSFI comes out and starts changing mortgage lending policies. Then of course, you got to start thinking, okay, well, this data is going to start to change. But as it stands right now, assuming all else stays the same, the data is pointing to a single-family market that is, if not topping out, in the process of topping out. And the condo market, to me, is obviously has been much healthier over the past 12 months, and I think is poised to go on a decent run here over the coming months. So take that as you will. As always, I encourage you to check out the Staretsky Report. We'll see you next month for another detailed analysis. Cheers.